All right, so today we are going to look into our commodities and our instruments. I mean, to know what they are going to do today because it's our daily activities. Okay, so every morning we do analysis on all our instruments to know the ones that are doing what that is going to go well, and we take a good advantage of them and enjoy the flow. So remember that you have to subscribe and also click the like button, okay? And you can also share to your friends so that they can use it to trade and make good profit at the end, okay? So right now, let's start with the Crash 300. This Crash 300, we are seeing the structure printing out clearly to us, okay? For a long time, we have seen this market dwelling downward, okay, pushing downward. If I put it on 4 hours, it will help us to understand what the market is doing, okay, on a bigger time frame. So this is the 4 hours, I presume, okay, so this is the 4 hours, I presume. So I see that the market is taking an up push from here. So this is corrective structure. After this corrective structure, the market took another up, okay. Okay, from here, this is a one impulse correction impulse. Okay, so now we see the market has broken this counter trend line. Obviously, it has broken this counter trend line. Obviously, okay. Now, because this has broken this counter trend line, so this is now a mono wave. So to me, all this does not matter now. What I see here is a mono wave. A mono wave means that this three wave has become this. Okay, so a mono wave. Now, what else? This is a corrective structure because this is the one that breaks the counter trend line that turns to what? A mono wave. So what are we expecting? We're expecting this to be a corrective structure. After a corrective structure, another push up, okay? But if you believe that another push up is going to come in, we need to look at what this heavy structure really shows us, okay? What this heavy structure really shows us. So we look at the heavy structure from the bigger angle, okay? Let's look at it from the bigger angle. So if this is an impulsive wave down, we have a structure here. After this up push, we have a corrective structure down, a reversal down for this up move, okay? So, or if we want to take it in a daily time frame, okay, we have to see this all these things to be a corrective structure anyway. But nevertheless, what we know is that this particular one now is bringing out a corrective structure anyway. So any up that is going, it can be the last impulsive wave or a corrective structure for more than, okay? Corrective structure for more than, okay? So, or it can be the last impulsive wave. Because looking at this structure, it has printed three wave for us. Looking at this structure here, it has printed three wave for us. This is the first impulsive structure. That is corrective structure. We print another down with three wave, okay? So now, if this market wants to go, it can be the last impulsive market upward, or it can do what it can push a little bit corrective structure for another down before it will go up. So nevertheless, we're expecting the market to push up, okay? So on 15 minutes, we watch out what the market is printing here on 15 minutes. You see that the market is using a shopping move, but it's consistent. A shopping move, but the shopping move is consistent, okay? So what we are seeing here is that the market has broken this counter trend line anyway. It has broken this counter trend line, okay? So which means this down now is already a mono wave. So we are seeing the first impulsive wave against this trend down. So what we are looking at is for this market, after this up push, okay, it will still go a little bit up push, then corrective structure, then it will go more up, okay? To go more. Any down that is going to come, I believe it should be a corrective structure for more up, okay? Because it is choppy anyway, but it is consistent in the push up, okay? So my bias is that after this push, any move for down should be a corrective structure. So We'll allow the market to play the structure very well. Let this up come first. After this up push, then we'll look for any engulfing candle that will help us to target the sell. Okay, let me check 30 minutes candle to see any of these zone, what they are pointing. Okay. On the contrary, I have no this thing here, no zone here, except this one. I only have one zone in this area. Okay. So let me check 1 hour if there is somewhere here. Okay, on 1 hour, there is no engulfing candle zone somewhere here. And beside this one, I'm giving engulfing candle indicating to push up. So where I saw it is here. So this shows that this neckline is going to be strong for this market to break. Okay, so the moment we see the market here in this zone, it means that the market has this tendency to drop down. So let me reduce this zone with the 30 minutes candle. Okay, for this 1 hour, let me reduce it with 30, unless they are the same place. Okay, they are not the same place, so let me reduce it to 30, the one of 30 minutes. Okay, so this will be the perfect place for us to expect the market to spike down. So now, what does it look like if we're expecting the market to spike down? Remember, I say it's a corrective structure. Okay, so this market is coming up with an impulsive wave. So once this market gets to this place, okay, on this market from here, let me drag it from here, get to this place. So what we expect is a corrective structure downward, okay? Corrective structure downward, then the market will equally move up. Okay, so I always draw a regular flat corrective structure. But if the market is is insisting that it is going to be going up consistently, it may not give us a regular flat. It may give us a running flat. Okay, what do I mean? It may give us a shape like this. So it may give us a shape like this. It may push down like this, push up, push down again like this. Then it will zoom up. So but is this a corrective structure? Yes, it's still a corrective structure. So we need to know what the market is doing. So once you get to this zone, it's going to go down. But that then is a corrective structure. So you be very careful how you are trading it down, because once you start pushing down, you will enter let's say 1 minute time frame. You can go for 1 minute time frame and watch carefully what the structure is printed. Once that this down 1 minute time frame has pushed first, do corrective structure, push down again. That is 3 waves. You better watch that market. If you break the counter trend line of that, it's returning up. Okay, so we know how to trade this the reversal. So no need to explain much. But once you get to this place, know that the market will need to give us a corrective structure, either running flat or regular flat or expanding flat or contracting flat. Either of those corrective structure, we should see it. So this will be our target for a sell, right? Okay, so let's look at Crash 500. Yesterday we are on Crash 500. So my major concern is if this market will do a nice thing by coming down to break this kind of trend line. That will be my final observation, that this market should drop more down. Okay, if not, obviously we can see the market still pushing up. But if we insist on crossing this area, then I am down. I am biased. My bias is down. Okay, I'll start looking for opportunity to spike more market downward. Okay, that is for Crash 500. It's as simple as that. All right, so we are on a Crash 1000. What we're expecting on Crash 1000, obviously this is corrective structure. Okay, so the question is, will it go up or will it go more down? So we can see the structure very clear at this area. Remember what we said yesterday? Yesterday we said that if this market reverse up to close this gap, is an engulfing candle and you use it to spike down. The moment you get to this engulfing candle, boom, didn't wait, just small thing, you just touch that place, boom, didn't wait at all for any minute or second. The market spike and give this corrective structure. Obviously, when you see the market with impulsive like this at that area, you know that what is going to this corrective structure for another up. Okay, so this is three-wave structure, and we are watching the market doing something like this. So obviously the market might or might not spike at this zone for more down, but once you break this counter trend line, you know that the more spike is going to come. But if you want to take a risk, like it should spike down. If you want to take a risk, like there are zones here. So these are possible areas that the market might reach and touch them and begin to spike down. But nevertheless, this is going to cost you a lot of money if you want to risk, because from above here to here, so it's going to cost you a lot of money inside this zone. So I advise you wait to see the structure that it will form inside it. You don't just jump in. Okay, don't just jump in immediately touch here. Allow it to enter. Watch it if possible on the 15 minutes time frame. I mean on the 1 minute time frame to see a nice structure before the market starts going down. If you didn't give you a nice structure, allow its intention might be to break this zone and create another high. And if you create another high, then we are not using these two lows. Then we'll use this low and this low to draw a counter trend line. Once it breaks it, then we'll continue down. Okay. So, but if you didn't do that and reverse from here and break this down, then you know that the market will do more down. That is for crash 1000. Okay. All right, we have 300 at hand. Okay. So I'm not going to do anything buy or any other thing except I sell. My target will be on sell, and I will be very, very careful on how I do what I targeted. This is my target. Once the market breaks this zone, you know, down is thick, but it's comfortable to, once the market breaks below this line, it's comfortable for you to place it down. You can tick it, push your stop loss above here. More tick supposed to come because this is a nice move. And another thing about this boom 300 is that this has gotten to the daily time frame zone. At this particular point in some daily time frame zone, resistance, a strong resistance at daily time frame. So whatever you are seeing, probably more up may come because of this this shape corrective structure stuff. So more up, a spike might come to clear this liquidity, then continue down. But I'm not going to go for that up. So the best thing to do is to allow the market to cross this. So just wait patiently. The moment the market breaks this counter trend line, you are good to sell. That tick may take a little bit time, but it can tick to the extent that it will give you a massive profit, okay? Because that tick may be something else. Look at the tick that we can be expecting. Just watch. Look at the tick. Just take a look. I know that tick, whatever you want to do, please, even if you want to place a run of flat like this, that tick can take us to this level, okay? And take us to this level. It's a nice one, okay? Just and if it vests, the tick vest can come down to this level. But let's just maintain the tick level at this area because it may want to form a run of flat one, but it's to show down, then another up before it starts going the main down. Okay. All right, let's look at boom 500. Boom 500 is clearing this zone, so we can expect a spike at any of this level. This is a zone, okay? It's trying to enter this zone. It's trying to enter this zone at this moment. So at this zone, we might expect a spike because it's riding with three waves. One, corrective structure, two, I mean, 1, 2, 3. So it's riding with three waves. Yeah, it gave us a spike now, okay? So we're expecting a spike at this. If he wants to break it, another one is here. Another zone here. Another zone is here. Okay. So you can also expect if you break this one, that's down one, and also support it to push up. Okay. So and if he wants to continue spiking up, fine. Okay. So what we know is that at this zone, the market is expected to spike up. So if you check 1 minute time frame, and if it's okay for you to enter a sell, fine. Now, what do I mean by entering a sell for 1 minute structure? Check it. That's what I mean by 1 minute structure. If it's okay for you, let's take a look at this. So the spike break this counter trend line, okay? So if it's okay for you to take a sell, and you can take a sell from here, put it below here. Take a buy, okay? Put it below here, enter a buy from here, put your stop loss below here, and allow the market to push up. This is the structure I told you that it has formed three waves, okay? This is the first wave, corrective structure, second wave. So the market choose to push up fine, and the moment it breaks this counter trend line on this 1 minute time frame, moment it breaks the counter trend line of this 1 minute time frame, I mean the market is good to go more up. Okay, so you take this either you enter here, your stop loss below here, or you wait for it to enter inside again. But you know, it may not enter inside again and start pushing up. So that is why you can take it from here, with your stop loss below and target the market upward. Okay, or you may want to wait for it to break this counter trend line before you start taking some spikes. Okay, anyone is your choice. Okay, all right. So let's look at Boom 1000. So the 1000. I can see something that looks like a running or expanding flat formation. So for another up push, but I'm not going for up again. I'm not going for up again. Okay. So what I'm targeting is a down move. Targeting a down move. Okay. Targeting a down move. So if this market breaks this counter trend line, just like Boom 300, I will go for down. So that will be the tick. A very nice tick that will be coming. And then that tick might be a very long one. You know, 1000 can tick very well. So that would be a nice tick. You just enter it, so put your stop loss and forget it. You check it after 4 or 5 hours to see what it has ticked. All right, we'll have volatility 10 at hand. Okay, so volatility 10 after this down wave with 3-way structure, the market choose to correct. Okay, so this is a corrective structure, so we might expect another down. Okay, another low before the market continue pushing up again. So a low is expected. A low is expected, especially when you see that this counter trend line has been broken. So we see 1, 2, 3. So another down. So what we are looking for is after this corrective structure, another down. Okay, another down is expected. So if we see this first up, this is a second wave, you see the market go up again, the third wave. Okay, after this third wave, we want to cross the counter trend line of that wave or that structure. You know, that is a down. We enter it and put your stop loss and go here and ride the last down. Okay, that is for volatility 10. All right, so looking at volatility 25 is an up push. So yesterday we have an understanding that there is a running flat coming up. Okay, so you did the running flat corrective structure. You first of all started from this for this up. You did corrective structure there. You get that up. Okay, so now we see that that up is 3-way structure. One running flat corrective structure and another up. So now what are we expecting? We are expecting a corrective structure after this high. So corrective structure need to form, a 3-wave need to form for another up to take place. Okay, another up should take place. So it may not be out of place if that corrective structure may break this counter trend line. If that this corrective structure will break this counter trend line. If we break this counter trend line, that will be a significant one because another up will come. What I mean is that if you have a corrective structure that will break this counter trend line, so this will be up. Okay, this will be a mono wave, a corrective structure for another up. Okay, so that will be more clear to see this market taking a high. Okay, but we know that this market needs to take another up. We need to see this market take another up. Taking it on 4 hours to help us to see the high that this market needs to go. The height this market needs to go. Look at it here. Look at it here. Look at it here. Very, very sharp. Look at it here. So what do you see here? This is important. This is a corrective structure. 1, 2, 3 is a corrective structure. So what do we see there? We see a running flat pattern. Okay, so this up may be a heavy one. It may end up giving us a massive up. Okay, so don't be surprised if we see consistent up. Don't say, where is this market heading to? Okay, it's just trying to fulfill a big time frame structure. Okay, that is for volatility 25. All right, so we have a volatility 50 trying to make a formation. So volatility 50, this is a corrective structure. Obviously, it has been taking its time since the day before yesterday, taking its time to do some formation. Okay, so I believe that at the end, we need to get another up. Okay, at the end, we need to get another up. But for now, let's stay put and watch, okay? Because you might need to go down and clear this liquidity before going up, or you might not. You will just go up to finish the last 2 days, okay? So let's watch out and see what is forming. Okay, so lastly is volatility 100. So obviously we know that this is a corrective structure, so we're expecting an up push, okay? Obviously, so but from what we are seeing here, the market looks like it wants to drop more down after this three-way structure, corrective structure. So more down with the final down, we may expect it to give them, we expect the market to push up, okay? So let's allow it to play what it wants to play, give us another look. Then use this counter-trend to target the what? To target the up, okay? Let's allow it to do this one. That will target. Okay, so that is for today's analysis. Remember to subscribe, click the like button, and also share so that others can watch and take advantage of it, okay? So don't forget to share, don't forget to like, and don't forget to subscribe so that anytime we have any video, you can get notification and enjoy the benefit. Thank you very much and have a successful and a profitable trading day.